Good afternoon and welcome to Biztech, Asian Midday Market Watch. It's the 24th of September. I'm Samantha Voon and I'm pleased to welcome back my co-host, Jeffery Halley. Now let's start by taking a look at the summary of market actions. Jeff, over to you.
Okay, a lot going on overnight, Sam. Global stock indices rose overnight as the various Federal Reserve policymakers, and we have a lot of them speaking this week, talked further interest rate cuts. Meanwhile, the euro fell against the dollar after some pretty ugly PMI readings from the Eurozone overnight. Looking into markets more deeply, US Treasury yields rose as bond investors continue to price out a near-term recession in the United States. It should be noted that bond prices move inversely to yields. Overnight, those Fed governors' comments were the ones that were in focus following the half-point rate cut last week. Three policymakers spoke overnight, and they all talked rate cuts to maintain a healthy balance in the economy and to offset any recessionary risks. That saw the Dow Jones Industrial rising 61.3 points or 0.15% to 42,124.65. The S&P 500 rose 16 points or 0.28% to 5,718.57, and the Nasdaq Composite rose 25.95 points or 0.14% to 17,974.27. US interest rate futures are pricing at a 54% chance of a 25 basis point cut by the Federal Reserve in November, according to LSEG data. On the data front itself, the S&P Global PMIs showed Eurozone business activity contracting quite sharply, particularly in manufacturing, with services fairly much unchanged from last month. But in the United States, the PMIs actually held steady for September, but average prices for goods and services rose at their fastest pace for probably the last 6 months. And that implies that we still do have some inflationary pressures lurking around in the background, and that may account for the moves in US interest rate futures overnight. In currency markets, the dollar index, which measures the strength of the greenback against a basket of major currencies, it rose 0.17% to 100.91. But after those PMIs, the euro fell against the US dollar by 0.45% to 1.1112. That's a mouthful. Against the Japanese yen, the greenback fell slightly by 0.22% to 143.60. That's the overnight wrap up, and back to you now, Samantha, for moves today in Asia's stock markets.
Thank you, Jeff. So we have the Shanghai Composite up 0.33%, the Hong Kong Hang Seng up 3.52%. Over in Australia, the ASX 200 is down 0.23%, and in India, Nifty 50 is up 0.12%. Now in Singapore, the STI dipped 0.02%, and in Kuala Lumpur, the KLCI is up 0.02%. And in Japan, the Nikkei 225 is up 0.92%, and in Korea, the Kospi is up 0.61%. So to give market insights, we have Tina Teng, independent market analyst based in Auckland, New Zealand. Now, Tina, welcome to the show.
Hi, Sam. Hi, Jeff. Nice to see you again.
Yeah, so Tina, tell us about the RBA's move that's going to happen. So we know it's widely expected that they're going to keep rates unchanged, and they also did strike a hawkish chord. So do unpack that for us.
Obviously, the immediate market reaction is rally in the Australian dollar. Is the RBA is actually very hawkish comparing to other central banks at this moment, especially after the Fed cut 50 basis points in the interest rates last week, and the ugly PMI data from the Eurozone, plus China just launched a slew of stimulus measures.
Sam, so the RBA has left rates unchanged this morning, but yesterday China actually sprung a surprise cut to the RRR rate, the repo rate, and announced a slew of measures, ostensibly, I guess, to help prop up the property market, which is driving the weakness in the Chinese economy. Can you talk us through what the PBOC did yesterday and what its implications are for China?
So yesterday, they did the cut in the 14-day repo, and today they just lowered the reserve requirement rates by 50 basis points, and also they lowered the 7-day repo by 0.2%, plus other measures to stimulate the property markets as well as the stock markets. I think. Even though this decision was anticipated. However, this flooding with stimulus measures just to bring immediate stock markets rally across Asia, and we can see actually the futures market in the European stocks pointing to higher open too. So what you can see here, global central banks are launching the easing cycles after the Fed confirmed they actually start this rate cut cycle. And also they actually start the cycle with a very aggressive 50 basis points cut. So that's take pressure off other central banks, even though like RBA still keep its hawkish stance. That's because the inflation is still above their target.
Let's look at some data from other parts of the world that came out overnight, particularly these purchasing manager indices, these PMIs. Europe stood out to me. It was pretty ugly reading there, frankly, particularly on the manufacturing side. But generally, the United States accepted, those PMIs weren't particularly good reading, frankly. Can you tell us what this means for the global economy? Are we looking down the barrel of a recession at the moment?
So the European countries, the major economies in France and Germany, the manufacturing PMIs have been a contraction for pretty much the past 2 years. However, the decline yesterday showed that there is deepened recession in the manufacturing sector. And also in France, after a month's rebound in the services PMI just because of the Olympics game, and this month showed a sharp decline again. So that's implying the worsening economic outlook in Europe. So that's promote the European Central Bank to cut its interest rates further and maybe even faster. That's why that's led to a drop in the euro dollar.
Yeah, speaking about the euro, I guess the PMI data sparked that sell-off in the euro overnight, falling nearly 0.5%, and the pairing of rate cut bets by the Fed by US markets wouldn't have helped that either. What is your outlook for the euro, for the single currency at the moment?
I think looking ahead, we still need to see like how fast these central banks will cut the interest rates. I think pretty much central banks are in a race of rate cuts at this moment. Either like 25 basis points or 50 basis points. 25 will be a normal pace of reducing the interest rate. However, 50 basis points are anticipated in the US, especially after China cut the rates too. So we'll see like what the European Central Bank will respond to the data. What would they say imply the further monetary policies on their path?
We can't hear you, Sam.
My apologies. Yes, Tina, do tell us about what's been happening with the gold price as well.
So in the markets, especially after China cut the RRR, gold price has gone up again, as well as other metal prices, including the silver and copper. I think that stimulus measures from China are boosting those industrial metals more than gold at this stage. However, gold is still the favorite of investors, especially right now, people are seeing a potential downturn in the global economy. So gold will be still seen as a haven asset.
All right. Thank you so much, Tina, for coming on the show today.
Thank you.
We'll be
Thanks, Tina.
speaking to Tina Teng, an independent market analyst based in Auckland in New Zealand. This has been Biztech, Asian Midday Market Watch. Be sure to keep informed on the latest market updates weekdays at 1 p.m. I'm Samantha Voon, and with me today has been Jeffery Halley. So this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.